All right, welcome back to the Elias Macko Show. We're going to touch base with Mariana Alfaro from the Washington Post a little bit later on. We'll do that in the third hour of the program. For now, though, let's talk about Hudson's Bay and the news that Canadian Tire will purchase much of Hudson's Bay iconic trademarks. Let's talk about that for a little bit here. Susan Krashinsky Robertson is on the line from the Globe and Mail. Susan, welcome back to the program.
Thanks for having me.
So I mentioned off the top of this hour, in fact, is yesterday on Monday, I went to the Bay. I went to one of the local bays here in Montreal, in La Salle, just west of downtown Montreal. And it was so depressing. I bought something, but it was almost like a punch to the gut, almost nostalgia-wise. I don't know. Have you spent some time in these Hudson's Bay outlets as they close?
I have, and the problem is that, of course, it's especially depressing now, but these stores have been depressing for a long time, and that's been part of the problem for Hudson's Bay. It has cut and cut and cut in terms of the amount it spends on its operations over the years. This is something that I've been reporting on over the last couple of months. And, as a result, those stores have really grown shabby. They've been underserviced. And so, what we're seeing now, the hollowing out of those stores, is really just the last step of something in terms of a decline that started quite some time ago.
Yeah, and I think you're right about that. And I wonder if it varied by store. It's certain, like the iconic flagship downtown. That's the one I would go to most often. So maybe I wasn't aware about what was happening in some of the other bays that are more in the outlying regions or not in downtown cores, where I think they were much more dilapidated than maybe the flagships were.
Yeah, it's interesting. And we saw where their priorities laid sort of halfway through this process. We were able to obtain a confidential memo last month that the Bay was pitching way before this Canadian Tire deal, which we'll get to in a second. They were pitching sort of prospective investors on a plan that would save 6 of their department stores. That's a way lower count than the 80 that they have across the country.
Yeah.
But they had been pitching this plan, asking an investor to save 6 of those stores to continue Hudson's Bay as a standalone department store, at least in a much diminished form. And in that confidential memo that the Globe and Mail obtained, we saw that basically they were saying that was going to require about an $82 million investment in the first year in order to turn those stores around. So even in the flagship stores, and you talk about that flagship downtown Montreal store, that was one of the 6 they were trying to save. Downtown Toronto was another one. And so they had this plan that they were trying to find a bidder for, and they were just unsuccessful. But even those flagships that you talk about maybe being in a little bit better shape than some of the other stores, they were going to take quite a bit of spending even just to get them back on their feet.
So that leads us to the deal from just before the weekend. Canadian Tire and their $30 million purchase of Hudson's Bay's iconic trademarks. Let's take a look at this deal. I think a lot of people are saying, oh, well, Canadian Tire, Canadian, Hudson's Bay, Canadian. This is a good match. How do you see it?
Yeah, it is. It makes a lot of sense for Canadian Tire strategically, if you think about it. They have a very well built out private label business. That's, brands that the retailer owns. So when you walk into a Canadian Tire, you're looking at a number of different brands that they have acquired over the years. So they own the Paderno kitchenware line. They own the Woods camping gear line. They, of course, own MotoMaster, all of those tools. So they have built up this business where they're not just a retailer selling other people's stuff. They sell their own stuff and they develop their own products. And so for them to acquire the Hudson's Bay stripes, for example, the coat of arms, which is another part of the deal, some of their private label brands, it really fits well into Canadian Tire's long-term strategy. Those brands, they made up a little over a third of Canadian Tire's sales just a couple of years ago, and they've said publicly they want to grow that. And so this really burnishes, I think, their image as a very Canadian retailer. It's right in their name. It's something that they do trade on. And it also expands maybe the prospect of what they can do with some of that intellectual property, not only selling under the Hudson's Bay name, but also, maybe putting stripes on some of the products that they already make. They make a lot of housewares. They make a lot of different things. And so I know that right now, those are plans that are going to be in the works as they talk about their strategy for some of this intellectual property.
Oh, so that's where it gets really interesting. And it was a couple of weeks ago. I went into a Canadian Tire. I had to buy a garden hose attachment, and it got the job done. Going to Canadian Tire, I found exactly what I wanted pretty effectively, easily. It was a good price, and I was happy with that experience. But as I see the aisles, as I go into a Canadian Tire store right now in my mind, the aisles are cramped. There's a whole lot of product, and I'm trying to think about where Hudson's Bay fits in. You think it'll be throughout the store in different areas as opposed to, a store within a store concept?
Yeah, that's the detail that we don't quite know yet. Canadian Tire has been pretty mum so far on its plans for those assets. Obviously, that's something that we're trying to find out. But just looking at it strategically, you can see where it might fit in some of the existing products. Now, it still remains to be seen, whether they'll do something more sort of store-in-store with that brand. That's something that they haven't disclosed yet. But I think it's also important to note that this is really an opportunity for them at a moment when people are very focused on Canadian brands. So this deal also gets Canadian Tire something else, which is a little bit of Canadian bona fides, which they already have in spades. Canadian Tire is its own well-established presence in the Canadian marketplace. They've been around for a long, long time. But at this moment when people are buying Canadian more often, they're trying to support Canadian brands. Many people were quite dismayed, even though they may not have shopped in a Hudson's Bay for years. They were quite dismayed to see Hudson's Bay disappear. And so this is a moment when Canadian Tire sort of steps in and says, we're a great Canadian retailer. We're going to preserve this Canadian brand, at least in some form. And I think right now, it's not to be understated that there are going to be some shoppers who really reward them for that, who see them as a positive force. And so it's a marketing move as well as a strategic move.
And Susan, to wrap up here, is Canadian Tire itself, are they strong right now?
Canadian Tire has had a challenging few years, as many retailers have. It's just been sort of hit after hit after hit for the retail industry in Canada. You think about it, they went through the pandemic and all the store closures involved in that. You come out of the pandemic, and then we have this rampant period of inflation that causes people to really pull back on non-essential purchases. And, non-essential stuff, that's a lot of what Canadian Tire sells. They sell essential stuff too, but they sell a lot of things that you don't necessarily have to buy. And that goes for other retailers too, who really struggled during that time. And now, with the trade war, with tariffs, it's not so much that they are suffering from higher tariffs. In a lot of cases, they're able to adjust in terms of their sourcing, but they are, everyone is affected by the decline in consumer confidence that has resulted from this climate of tariffs and trade wars and, talks of what this could do to the Canadian economy. And so it's just a really tough time in general to operate as a retailer. And Canadian Tire has been sort of trying to, work their way through that. And they recently launched a restructuring plan, in fact, to kind of keep their company sort of relevant for the future. They're doing a lot of work so that they can stay on top of this and hopefully position themselves for when consumers come back.
Susan, it's always great talking business with you. I want to thank you for making the time for our listeners this morning.
Thanks very much.
Susan Krashinsky Robertson, retailing reporter over at the Globe and Mail.